Hi there, welcome to SUI Wyckoff Technical Analysis session. So 2 weeks ago we covered SUI and showed an example of a price movement that contradicts to traditional textbook theory. And in the past 2 weeks, SUI has come down and it matches certain Wyckoff pattern. So let's take a look and see what happened and where it's heading. Here, this was the week we covered SUI on September 14th, near the end of the week, and then immediately after, we've got this bulge, like if I turn it to a line chart, you see what I'm talking about. This little peak happened and it dropped below the key light blue level of $3.27. And remember I put in this tag last time, or maybe even before last, that the possibility of this being an LPSY, last point of supply, is 75%, and it did happen that way. So that's confirmed, and this now becomes a far down the line thing that it may or may not happen. The reason I said it may still happen is because what's happening here, this long candle, long red candle that we have this week, well, the candle body is long, but then the volume isn't that crazy. And the fact that it stops, if you look at the wick over here, it stops right at or near the cross of this downward trend line, as well as this yellow upward trend line, support line. So two support lines over there. It stopped right at that cross. That's the funny part. If it really ends here, and when we get into next week and the week after, if the price continues to trade within this narrow range, by the end of October or near the end of October, we'll get to this intersection. And once again, this will get into a situation similar to what we experienced back in beginning of the month or end of August, early September, that a breakout point or breakout time point is sitting right there waiting for the price to hit it and tell us which side is going to go further. That's where the whales make the move or triggers people to make the move. So here, according to Wyckoff, if this is really the end of the distribution cycle, obviously this is where it's heading towards another sign of weakness. So the last one we had was back in June, in mid-June time. That's when we had this support line happening. So I should adjust this a little so it covers the wicks of the candles, not just the body. So this doesn't change. You see this cross right there doesn't change even if I adjust it to the wicks. Interesting, isn't it? It seems like there's somebody drawing it by hand and stop it right over there. And then, now the point is, this seems like it's getting a 75% chance now, or maybe not 70, 65 for the time being, because it hasn't fall below this yellow dashed line yet. If it has fallen below this line, I would give it a 75 or even 80% chance to the sign of weakness. As of now, we see this momentum is declining. So I am intending to show you this, but in order to show you that this is a curved line, like hand drawing, maybe I draw it bad, right? So I need to draw a straight line to show you. If it is a straight line cutting across the peaks, you see the first two LPSYs, right? The third LPSY, if it's really trending upwards, this peak should have hit the red line over here. So from this point to the red line at its peak, at its same time point, it's about 7% gap right over there. So it missed the mark by 7%. So that's what I'm trying to point to. This curve here indicates declining momentum. So there's just not as much support or people FOMOing in as before. Let's switch this back to candlestick. So the big picture, this is where it's heading. More likely than where the other 35% go. I would say this remains low. Let's say 50. The other 20% is probably another LPSY somewhere around here. So it may or may not form. So why I'm saying this, or like, am I tricking you? No. The reason is it can trade pretty much horizontal and then immediately drop. So that's why this never really shows up. The other way it happens is when it breaks outside of this triangle, it still stays above that yellow dashed line, but then it eventually comes down. So that's when this happened before the sign of weakness. So the difference is kind of horizontal and then go immediately towards the sign of weakness. Second scenario, scenario B, is show us another little bulge and then comes down. That's the two scenarios that it can head down to the sign of weakness. I just want to check whether we've got that kind of example. Not as much as this time, so we've got way many. Okay, so there's one here before it hits the sign of weakness. So we had an LPSY and then it came down, it got a little tiny peak over there and then it comes down. That's what I'm saying. It can be a little tiny peak over here and then it comes to the sign of weakness. So enough for big picture. It's not very bullish as of this moment. Just quickly check the Bollinger Band current squeeze. We're technically still in a squeeze, so meaning the bigger price move has yet to come. So this candle, if you think it's big, it's not that. It is the bigger moves that's going to come. Imagine if the swings are all the way past these two band boundaries. That's where it can potentially go to. And interestingly, that's where the yellow key level is, the 2.35. These two channel edges are very close to this, and when it comes down to the sign of weakness at this level, that's exactly where it's going to hit, if it really comes to the downside, obviously. But if it goes to the upside, then it's going to challenge this purple, much like what happened back here in late July. However, like I said, it's a declining momentum scenario. It's not zero chance, but less likely. Now let's get to the daily chart. Daily doesn't have a squeeze as of this moment. The squeeze force has been kind of released over the course of past 3 weeks, and if this really trade at a narrow range, like I said, in this triangle right over here, then the squeeze will once again happen, and by that time we'll see where it's going. So if it's coming around mid-October or the first 10 to 12 days of October, like I said in many times, that the price breakout doesn't wait till the final candle before the cross section, or where the line crosses each other. So when that happens, this I believe will see a squeeze, because this region is so narrow that the price squeeze can form in pretty much 3 to 4 days, and we're already kind of into that zone right now. So let me zoom out a little and take out the Bollinger Band current squeeze and just focus on Wyckoff. Like I said, this obviously hasn't happened. This obviously had, plus another one as well. So it's a lot more frequent in the daily time frame compared to the weekly. So this can be another sign of weakness within the cycle of the daily chart. And it seems like it's finding a bit of support. If it really comes down, that may turn into the selling climax that the tag I've put in already, expecting it to come further down to the yellow key level, like I said earlier, when looking at the Bollinger Band and Kerner Squeeze channel edges, or the lower band, basically. I think that's... I'm just comparing this when we had this leg downwards to the one we're having right now. If there's a downtrend forming, currently it's pretty flat if it's a downtrend, so I can draw this out so you are able to visualize it, because by looking at the candles tips I already can see how flat that is if it is really a downtrend. So if I just group together these LPSYs and the SOWs, let's drag this out. I'm gonna make sure we've got this correct. Yeah, that's about it. So it's pretty flat. It's not even like the slope of this white dashed line. So that's why I say if this is really a downtrend, it hasn't touched the bottom edge yet. The 3 drops in a row kind of situation. Drop 1, pause for 2 days, another drop, pause for 2 days, another drop, pause for another 2 days. Now, again, we still have 8 hours left. Hopefully it doesn't follow this pattern, 1, 2, 1, 2, 1, 2, right? Then, like I said, if it trades sideways, that's alright. If it comes down, it's not a surprise, and it bounces off, and probably got rejected by the yellow dashed line as well as the light blue key level before before it eventually comes to the further end of the box. But this channel box, I think it's still a bit premature to say that it should be that way. However, I can keep this here, so next time when we come back, we'll see whether it's doing the same ping pong action again. So if I turn it to a line chart, that's ping pong, ping pong, ping. Yeah, so that's how it happens when we have a channel box to guide us what the price actions are doing. Yep, back to the weekly. Remember what I said, that the price has entered a pretty narrow zone, this triangle right now, and within 2 weeks time is the time point for another breakout. When that happens, we may see a little bulge, another mini LPSY, before the price gets to the sign of weakness. So that looks to me the more likely scenario. However, the critical factor is this yellow support trend line. So if the price continues to stay above this line even after this triangle, I mean the date somewhere around October 13 to 15, if the breakout continues to the upside, there's still a slim chance that we see an UTAD2, but it's not likely. However, whether you're bearish or bullish, always set your stop loss. See you in the next session.